Good evening, folks. Welcome back. So, you probably watched the little execution I did via my phone this morning. I was laying around thinking, let's just get in here and do something. So, I was trading the NQ, and I'm going to go over the salient points as to what I was using and what I saw in price action. It's a little bit easier to see it on the large screen like this, but I promise you, everything that I'm going to highlight here was the backbone and framework for everything that I did in the execution. So let's take a quick look at it. Real quick, pause the video and study what you think you see. Okay. When you're done and you think you've annotated everything that was salient to this price run, unpause the video and then compare and contrast what I show you in my annotations and what was used for the trade. All right. So if you haven't paused, it's getting ready to ruin the whole experiment for you. Relative equal highs formed during the London session. At 5 a.m., we roll over into dead time between 5 a.m. and 6 a.m. There can be price runs, but we're looking for 6 a.m. start time. Okay, so 6 a.m. is the earliest that the higher probability price runs can be trusted. And then obviously we go into 7 o'clock to 9 o'clock pre-session time. Okay, so that starts the clock at 6, right there. Okay, and then to 7. There's 7. Okay, so inside that little window, there can be a price run that can materialize in price. And I'm looking for those types of things, especially on non-farm payroll weeks, because I want to be in there. Like the old adage is, the early bird gets the worm, which is why I titled it today, Early Bird. So this buy side in here, the highest high is this one right there. And we have sell side here, and we have relative equal lows there. Okay, isn't it convenient how it ran up above, taking that buy side? We broke down, traded down into that low there, clearing out that area. So buy side taken first, then sell side. Okay. So let's add the lipstick real quick so that way the video isn't too long. All right. So there's that. So with the buy side liquidity right there, the market rallies up, and then we have one more rally higher. So it's a slightly higher high, and then we start the macro. So 5:50 a.m. macro time. What should we expect? We've taken buy side. Where is it smooth? Here. We have a minor sell side liquidity pool there, and we have relative equal lows there. So we ran buy side. We have a inversion fair value gap right here between this candlestick's high, this candlestick's low. We gap down with a volume imbalance. We trade up to consequent encroachment here and sell off during the macro. We have a breaker, which is a high, low, higher high. That body, drag it through. You can see we trade up into that. Then the market starts to trade lower. And then right here on this candle, see what we did there? We have a candlestick close outside of this buy side and sell side efficiency, which validates this becoming an inversion fair value gap. This is not validating it. It's just wicking down through it. We want to see it trade down. This is Michael's smart money concepts, order flow concept, not some just because it went below here. We're not doing order block. Okay. Order block does not require a close. Inversion fair value gaps require the close. Okay. So put that in your notes, because if not, you'll forget it, I promise you. And then the rally up, we stop in the upper quadrant of this buy side and sell side efficiency. And then we aggressively leave the range. And then right in here, I saw that gap. And I wanted to be a part of the move. So I threw in a small position with just simply 2 contracts, anticipating the likelihood of trading back up into the low of this inversion fair value gap. And then we had this sell side imbalance, buy side inefficiency here, which I have highlighted with these 2 little trend lines. So as it went into that, then it added the lines portion of the position I wanted to assume. And then we break lower aggressively. We take out minor sell side. I took partial there and then back up into consequent encouragement there. And I added those two contracts I took off below here. I added them right back on. Pretty neat, huh? I got lucky, don't worry. And then the market rallies lower, and then we attack the minor sell side there. We breach that, and then we aim for that once it went through it. And then I added another exit as it went through, and then finally traded down below the relative equal lows there. So if you look at it, okay, if you look at it real closely, you'll see original consolidation, first stage accumulation, and sometimes a fast move doesn't have second stage reaccumulation. So it could be just one and then done. Smart money reversal, low risk sell, first stage distribution, second stage redistribution, and then the biggest move takes place there, clearing the relative equal lows, original consolidation, and then just for extra measure, targeting determinist objective I had. And I know it's not on here, so let's put them on there now. Here's the executions. There's the business there. And you can see here's the first entry with the two contracts right at consequent encouragement of that little inversion fair value gap I was anticipating. And then we have distribution of all this run up in here. I'm getting inside that. So I'm adding more positions inside this. It broke lower, partial rate below that low there. And then it rallied up and I went short there. Well, I'm not going to be able to show them. 544.75. So that was right there. Right there's where the fill is. It's not bad. Close enough for government work, right? We trade lower, then back up into the fair value gap. It's bearish. Then we sell off precipitously, taking out that low. You can see that fill is right there. And then targeting that. All done on a smartphone, lounging in the house with pajamas still on. And then the relative equal lows there. Finally clipping that there. And then what you know it, on my exit candle, it reversed right there. That's crazy, right? That's crazy work. Buy side of balance, sell side of efficiency. Don't forget your little volume of balance. And then rally up and back in here. Shout out to Dasha over at Lumi Traders. I ducked in real quick and told her to prepare for new all-time highs. She was asking me some questions about the technicals. And lo and behold, the market does in fact trade up into a higher all-time high. Used it there, and then we swept it once more later in the portion of the day. And now where we're at here, or in Asia, we're working around that old all-time high. So relative equal highs, be mindful of that. They'll probably utilize that as a next draw on liquidity. Try not to pick the tops. Until I talk to you next time, wish you good luck and good trading.